Canada. Now, away from earnings onto the fiscal side of things, Ontario's fall economic statement was released today. The so-called mini budget showed that the deficit is expected to be smaller, a deficit of only $6.6 billion. That's down from the original plan that was laid out of nearly $10 billion. The decrease is driven by higher tax revenues, lower borrowing costs. The province still acknowledged it faces challenges with respect to growing unemployment, stalling housing starts, and generally lowering public spending. Peter Bethlenfalvy is the Finance Minister of Ontario, and he joins me now. Peter, I mean, it's my job to be critical, but this is a budget in which, you know, the deficit has come down, revenues are moving higher, and there is spending.
Well, look, great to be with you, Amber. Look, our deficit improved by, over the 3 years, by almost $7 billion. You know, if Ontario was a country, we'd be like in the G20. And you tell me who's got a path to balance in 2 years, who's got their debt to GDP dropping like the lowest in 10 years, interest expense to revenue the lowest since the 1980s, a strong fiscal track record, credit rating agency DBRS upgraded us to AA. Moody's and S&P have us on positive watch. You tell me who's got that. And you know what? We're able to be fiscally responsible, but invest record amounts in healthcare. Our economy is booming. We're being able to give people checks back and taxpayer rebates at a time when they're struggling with the cost of groceries and the cost of gas, the cost of housing. So we're feeling pretty good. I think this is a very strong statement, and the world is noticing.
Let's talk about that rebate. You know what the critics are saying, that this is a bribe ahead of an election.
You know, to the people who are struggling to pay the groceries, to pay the rent, you know, are struggling to, you know, pay gas and other discretionary items, you know, interest rates have been very high and inflation has been very high. It's come down, but it's still, food prices are up 20%. So many people across Ontario are going to benefit and we're providing some help here. A family of five, $1,000 is really going to help at a time when they really need that help.
Food is one of the key insecurities. We just got the grim statistic about the Food Bank of Canada. Attendance at the food banks is double what it was 5 years ago, but so is the healthcare situation, an absolute crisis in terms of being able to just access primary care. You've laid out some money to entice those learning here to stay here, but is it really enough? Is there something greater and more targeted that needs to happen to address that?
No, we've got a very robust plan on healthcare in this province. Record amounts of investments, increased by $10 billion in the health sector just in the last 2 years. You know, and if you look at primary care, we lead the country. 88% of people have a family doctor, but that's, for us, that means 12% don't, and that's what we're very focused on. That's why we've launched 3 new medical schools. We're targeting family doctors. We've increased the number of medical seats in Ontario. In this fall economic statement, we're proposing that 95% of those medical seats are for Ontario students, the other 5% for Canadian. You know, Ontarian are the best and brightest in the world, so let's have them go into our medical schools. And you mentioned the Learn and Stay grant. If those doctors who go into school stay in their communities for 5 years and be family doctors, we pay for their tuitions and expenses. So we have a path to close the gap. In addition, we brought on Dr. Jane Philpott, who will help us, who's got a lot of credibility. I've worked with her before, so we'll continue to lead the country and get to where 100% of Ontarians have a family doctor.
Health, food, those are all on Maslow's hierarchy of needs. So too is shelter. And on that, it looks like your housing start numbers have come down, and you're not going to hit your target of creating 125,000 new homes. Why?
Well, as you know, interest rates play a big factor in housing starts, but those rates are coming down, so that'll be stimulative. There's a lag effect. Number two, we include, beyond, those are private sector numbers, we include in our numbers student housing, long-term housing, things like that. And just last year we hit our targets, and just 2 years before we had the highest level of housing starts since the 1980s. So, we're doing a lot of things to stimulate housing starts. I suggested to the federal government if they lowered their HST for purpose-built rentals, we would eliminate ours. They did a year later after I proposed it. That's going to help more purpose-built rental units be built. And we've also put in billions in my last budget to work with municipalities to put sewage and wastewater infrastructure in place. This is going to pay long-term dividends in terms of housing starts over the next 5-10 years. And yes, we are not going to give up on our target. We're not going to relent.
Part of the boon in terms of revenues came from population growth. As that stabilizes and the federal government pulls back on some of those measures, how might that dent the books?
Well, I'm not going to speak to the absolute mismanagement by the federal government on the immigration file, which they have.
Sounds like you are.
But what I am going to talk about is, how we're putting in the place the health care, the schools. We have an unprecedented capital build, $191 billion over the next 10 years to build the subways, the highways, the schools, the hospitals. And we started that 6 years ago, and we're going to continue. We inherited an infrastructure deficit. Population was growing. And the previous Liberal government, they built virtually nothing. They increased taxes and fees. We're doing the opposite. We're building everything. We're reducing taxes and fees. In fact, we haven't raised a tax or a fee. We're cutting taxes and putting more money back in people's pockets. So we've got a vision and a plan. We ran on it in 22. This fall economic statement is a continuation of that plan. And it's a successful plan, and it's working.
Shovels in the ground is great, but what about cutting the ribbon? We're still waiting for things like the Eglinton LRT to get up and running. What about our inability to kind of complete these projects as you contemplate billions and more on time?
We inherited that Eglinton Crosstown from the aforementioned Liberal government, and we're going to get it completed. But you know what? We put money into building subway lines. There were virtually no subway lines being built. So you got population growth. Think about that. How are you going to move people and goods? So we're investing in a $70 billion transit plan, $30 billion for highways. Highway 413, we're getting shovels in the ground. That doesn't happen overnight. You have to have a vision. You have to have a plan. And we've consistently advanced these projects. We're advancing the 413, advancing Bradford Bypass. I'm sure for those in Toronto, you've seen the construction on the Ontario line, the Scarborough extension, the subway to Richmond Hill, and so forth. So this is a government that is getting it done. It takes a while to build these things, but I'll give you a guarantee we're going to get them done.
Is there going to be a tunnel in the 401?
You know what? We're trying to tackle gridlock. We're rebuilding the economy, we're building critical infrastructure for growing communities, and we're tackling gridlock. It's just not one thing. We're obviously removing some bike lanes and addressing the bike lanes because our streets are clogged up. We're building transit, subways, highways, the GO train system, and that's the 401 idea is just another idea to solve gridlock. We're doing feasibility studies, but I can tell you that as the finance minister, whatever we do, we're going to do it fiscally responsibly. We're going to do it with taxpayers' money. It's very dear. We're going to make sure we do it the most cost-effective and efficient way possible.
Minister, thanks so much.